I think one of the key principles that I always share is that we save first before we spend rather than we spend first before we save. So some people are people who like to spend and they have no qualms about spending. Yeah. And then there are some people who have this tendency to feel like, oh, if my bank account is less than a certain amount, they will feel very uncomfortable. I call it the Superman mentality. Yeah. We are young, we think that we are invincible, and not to overstate or overthink our ability to avoid illnesses or accidents.
That's the thing about insurance, right? You buy it, then you hope you don't have to use it.
Precisely.
It's like that lah.
But that's also the thing that stops you from buying it sometimes.
No, exactly.
Yeah.
I tell you how jialat I was last time, right? To the point that I have accident insurance, right? I get injured, right? Then I go to hospital, right? Then I get the bill, right? Then I never claim.
There are basically some principal foundations for investment, which is, I would say, the mother of it all is actually the time horizon.
Okay. Yeah, so long term or short term lah.
Correct. Then the other thing is being diversified, meaning to spread the eggs across different baskets and not to put everything in a single portfolio. But when we talk about compartmentalizing, it's really to recognize, which is meant for saving, which is meant for spending. That way, if you know that you have already set aside the right amount for your saving for the future and there's a plan put in place, then you can also spend freely in the account that is meant for spending so that you'll not be feeling overly restricted.
Welcome to Youth Tea Party, the show where we spill the tea on all things youth. We are not a political party and have no interest in running for office. Sometime 2 years ago, I think, one of my students, right, they asked me a question. They said, what is the most valuable piece of advice I can give to them? Then I thought about it, like in my youth days, right, what was one of the biggest mistakes I made in my life, right? What I realized is financial planning. The reason I brought you here, right, Jeremy, is because you are probably one of the people I trust most when it comes to financial planning and literacy. So Jeremy and I, we've known each other for about 26 years now, I think. Around there, around 26 years. He's also my financial planner now, and I think I'm one of those people that was very resistant to financial planning. Okay, not resistant, but lazy. So I'm the kind of person that I earn the money, just put in the bank, and then that's it, right? And I just spend the money. But then I started to realize that actually it's really very important. I'm going to start by being very real here. Most people, they see financial planner, right? Then they will equate it with insurance, right? And when they see insurance agent, right, they will turn the other way. Why do people fear insurance agents so much?
Now, I think the truth is that insurance products are not one of those things that we wake up feeling like, oh, I want to buy it. It's not something where it gives you a thrill or satisfaction of purchasing.
Yeah.
But at the same time, I think most people today also are aware that it is important. So there is this sense whereby they are worried that they are getting into buying a product that is not suitable for them, because insurance products, after all, can be pretty complex. At the same time, also, there is no doubt there are actually black sheep in the industry, or maybe stigma that has been built over the years because of very aggressive sales tactics. Perhaps there's also a misalignment in expectation.
Yeah, it's true. I think sometimes lack of information or misinformation, you pay the money already, you don't know where your money has gone to, then your agent a bit MIA, cannot find, that kind of thing. Yeah. So I understand that. I think that's all fair. But I know for a fact that, especially for you, right, you have become a living embodiment of the importance of insurance recently.
Oh.
You went for a major procedure in your life, right? Really quite major. Tell us about it. What is the scientific or the medical name for the procedure?
It's a oral maxillomandibular advancement surgery.
From the Latin words, I can mandibular is jaw.
That's right.
Okay, advancement, I don't know, literally advancement.
So bring it forward.
Bring it forward.
Yeah.
So you have to bring your jaw forward.
That's right.
Why do you have to bring your jaw forward?
Okay, so long story short, I have probably been living with this condition, but it's just that I only got diagnosed recently in the last year or so, because I was struggling a lot with sleep.
Yeah.
We all sleep every day, but I never really saw it as a problem until my wife actually picked up on it. She took a video of me sleeping one day, and then I noticed that, I was not breathing at some periods in time when I was sleeping. So went for a sleep study, got diagnosed with obstructive sleep apnea at the age of 33. So sleep apnea basically means the interruption of breathing when you are sleeping. And very typically, you would see that people who suffer from sleep apnea would be snoring. The manifestation of the side effect or the symptoms is really in the daytime, because daytime you don't get a good night's rest or good night's sleep. Then daytime you just be sleepy. And I think one of the things that I gotten used to, which I think you would be very familiar with, is that I don't actually sleep much, because there was a point in time where I felt like, whether I sleep for 3 hours or 6 hours or 8 hours, right, it actually all feels the same.
That's damn jialat. Okay, so aga total bill for a procedure like that, how much?
Okay, so I went with the government hospital, with SGH. I was a private patient there.
So government hospital but private.
Yeah.
Okay.
So there were a few figures that were given to me. I'm still waiting on the official bill. But during the financial counselling, the total bill, including all the pre-op as well as the op itself, estimated to be about $60,000.
How much of the 60K is going to be insured?
So the whole bill is expected to be insured because it's a medically necessary procedure. In today's context, where we talk about medical reimbursements, up to 95% of the total insurance, or in terms of the total bill, will be reimbursed. So I would be expecting to pay about 5% of this total bill, of which I can fund it either with MediSave or cash or even company insurance.
Yeah, exactly right. So I think that itself is a really compelling story as to why insurance and cover is quite important. Because these kinds of things happen to anybody. Okay, so we know that it's important, but when we contextualize it to youth, right, I think it's slightly different. If you could advise youth about financial literacy, one piece of advice, what would it be?
In my experience doing financial advisory over the last 7 years, it is very common that I hear younger people, whether it's youth or young adults, they share that they are weighing up the risk of insurance premium versus risk of actually falling ill. And I think that is one of those risks that we shouldn't take. I do believe that, illness can strike anybody at any time. If we're not talking about illnesses, then at the very least accidents, because accidents are unexpected. So those are the things where when we talk about insurance is actually something that can only be attained if we are in good health and good physical condition. So this is what we call the term insurability. The ability to obtain insurance.
Basically,
so
you cannot wait until you are already like very ill or what all this. Then your premiums or your insurability, is just your insurability is just going to be much lower.
So there are some aspects there whereby there may be certain conditions that that you can be excluded from, or if not, you will be loaded on the premiums. But I think those are still manageable risk, because if you're willing to pay more, you still can obtain coverage. There are instances where people are entirely rejected for coverage. So I think that is I call it the Superman mentality. We are young, we think that we are invincible. Those are the things which I would advise to guard against that kind of mentality to begin with, and not to overstate or overthink our ability to avoid illnesses or accidents.
So I think that's really good advice, right? So that's like a mindset kind of thing, right? But you think about it, actually, youth, right? Especially those who are engaged in sport and everything. Simple thing, you break your leg, then you have to go up, then you have to go physio, then you have to go all that. It's very expensive, what?
Yeah, I mean, it is pretty common for accidents to take place, especially if we are doing sports, right?
I tell you how jialat I was last time, right? To the point that I have accident insurance, right? I get injured, right? Then I go to hospital, right? Then I get the bill, right? Then I never claim. That's how lazy I am. No, I swear, man. At one point in time, right, I was accumulating so much, right? But I just damn lazy. I don't know why. Then I never
You say that you were very rich before, so that's why you just pay off.
It's not about being rich. You got money also, you want to claim.
Of course. Okay,
but anyway, just to clarify, my very rich is very rich in relationship to like secondary school. Okay? Not say like I got a few $1 million or what. It's not. Before you even start doing anything, right, you should change your mindset first. Because I think a lot of them, the mindset, like you say, is like, for what? It's not relevant to me. But that's the thing about insurance, right? You buy it, then you hope you don't have to use it.
Precisely.
It's like that.
But that's also the thing that stops you from buying it sometimes.
No, exactly. But that's the thing. But when you need to use it, it has to be there. If not, damn jialat, I tell you, seriously. So when it comes to like saving more generally, how would you advise youth to save?
I think that when we talk about saving is one of those lifelong principles that you should have in fact, right? Because we always need to cater for instances whereby it's a rainy day. We talk about emergency funds. And savings is one of those things where it builds up as a habit. So if we build a spending habit, then we will be spending lifelong. If we build a saving habit, we also save lifelong. Now, if you're talking about even when we have very little to spare, then we just talk about percentages. It doesn't have to be absolute dollar amounts. But I think one of the key principles that I always share is that we save first before we spend rather than we spend first before we save. So meaning to say that if like I have $100 allowance or $100 paycheck, instead of going on to buy whatever I want before saying, oh, what I have left over, perhaps the way to manage this budget, right, would be, okay, I know I need to save. Can I be disciplined and set aside, whether is it 20%, 30%? I put that money aside. If it's 30%, I'll put aside $30 and then I'll have $70 left to spend for that period of time that I have that income. So this way, it forces you to create that habit of setting aside for the future.
Okay. So again, a bit of a mindset shift lah, followed by a simple practice lah. You literally just put aside some money first lah. So you force yourself in a way lah.
In some senses, yeah. You can think of it that way. I think compartmentalizing also. Some people also have. I talk about this thing called money personality.
Okay.
So some people are people who like to spend. And they have no qualms about spending.
That was me, yeah.
Yeah, and then there are some people who have this tendency to feel like, oh, if my bank account is less than a certain amount, they will feel very uncomfortable. So then they would squirrel away a lot of money to begin with. But when we talk about compartmentalizing, it's really to recognize, which is meant for saving, which is meant for spending. That way, if you know that you have already set aside the right amount for your saving for the future, and there's a plan put in place, then you can also spend freely in the account that is meant for spending so that you'll not be feeling overly restricted.
Yeah. I think that's a very good way of putting it. The next thing that's very interesting, right, is at what point should or can youth get a credit card?
I think credit cards are fantastic tools.
Really, man?
Yeah.
Okay. Why? Explain.
So credit card gives you like a world of rewards, perks, rebates. I think you see credit card promotions. They also do give you free gifts from time to time. But I think more importantly, if you actually use a credit card in a way that is in a disciplined and responsible manner, you can actually unlock perks that a debit card or just cash alone will never get you. So the important thing here is that, when we use the credit card, we need to be disciplined and responsible. Yeah. So to answer the question of when youth should get a credit card or when can they get a credit card, I think firstly they need to qualify for it.
Yeah.
Typically for a credit card, you do require
a wage.
You need an income. The banks do make an evaluation on whether you are earning, whether you have earning potential before they offer you this credit line. And in fact, I would encourage most people to utilize a credit card because it is one of the easiest entry points whereby the banks or the credit bureau of Singapore is able to give you or assign you a credit score.
Singapore such thing on credit rating all this.
Credit Bureau Singapore.
I didn't
CBS,
know. I really didn't know. I learned this. I know it sounds very stupid that I don't know this, but I literally did not know that Singapore they do credit rating on.
Yes, they do as well, because this is where they evaluate the individual on their ability to either take on loans, to take on financing instruments or any other credit instruments. And the banks or the financial institutions would actually make an evaluation on how much they can offer you or what is the percentage of interest that they can offer you for certain credit lines depending on your credit rating.
I see.
So for a good way to start building this credit rating is to actually get a credit card and make sure you pay your bills on time. So if you actually rack up bad debt or rack up late payment, then that would affect your credit score, make it lower, and that may affect your ability to take on different credit lines in future as well.
Wow, but it's quite strong for youth to have to manage all these things also, right? So it's like you say, when you use a credit card, then you have to be disciplined.
That's right.
Because if you're not, then you could A, easily spend too much, or B, forget about all this, like your debt and everything, right? You don't pay, then you rack up. I would say for most youth, a late fee of like $200-$300 is a lot of money. So all in all, you recommend credit cards in a sense whereby it's not the credit card that's the problem. It's the mindset and discipline that's the problem.
I mean, for sure. I think everything that we do in life, there are pros and cons to different approaches or different instruments. Let's just put it this way. If credit cards are so bad, honestly, our government or our MAS in Singapore will also ban it already. I mean, if people cheating money is good, then the police will not come and catch you lah. Right? But it's because these tools are out there. There are actually the good side and the bad side. We need to know how to navigate them.
Fair. The next thing is, after credit card, right, the next popular thing is investments really.
Okay.
Right? There are, of course, so many different kinds of investments. Nowadays, investments are made quite easy with things like the stash away lah, this kind, like robot investors and that kind of thing. Do you generally encourage this? So for example, if I'm a youth, say I have this disposable income of 1,000 a month, I want to help my money grow. What kind of advice would you give?
So I think risk appetite is very subjective to the individual. And I do not want to be in the position to advise whether you should be more risky or less risky, because everybody's attitude towards risk can be different. I think that's the thing that we firstly have to recognize. But whether we do investments in general, it is something that I would encourage. How we manage the investment risk is what I would then help coach and guide. If you are somebody who is a bit less risky or a bit more risk averse, then we look at instruments that are safer in nature, that are not so volatile. But if you are able to take on more risk, then that's where we can also look at products that can give you, a better return with a little bit more risk to the capital. There are basically some principal foundations for investment, which is, I would say the mother of it all is actually the time horizon.
Okay. Yeah, so long term or short term lah.
Correct. If I'm able to hold for a long term, most diversified portfolios over the long run, right, would actually grow.
Okay.
So that can help to mitigate any risk that I'm looking in terms of short-term volatility. Then the other thing is being diversified, meaning to spread the eggs across different baskets and not to put everything in a single portfolio or a single instrument. So by adopting just some of these simple philosophies, you can really start investing and perhaps do it in a way that is principled, and that can help you in the long run. Let's just be very clear. Savings and investments are still different. Right? Savings, we stash away the money. Okay, not stash away.
What's your choice of words?
We put the money aside in cash and we accumulate it. But for investments, we actually do expose it to a little bit of risk for a hopefully better reward or return. So as a good habit, it is good to be exposed to it, and there are many platforms that allow you to enter investments at very so-called low entry entry capital. As opposed to traditional financial institutional products, typically they require a bigger commitment. So if this is something that you are interested in and you are wanting to expose yourself to it from an early age, I wouldn't say I discourage you from it, but do get yourself very familiar with it first. Without the proper education and the ease of access, this is where people also can get burned quite easily.
So a lot of people, they say that, I can do my own planning, my own financial planning, my own insurance planning. I can buy for myself. I cut out the middle person. What are your thoughts on that? Like, what is the value of having a financial planner to help you organize these things?
I think the first question that we can ask ourselves is that, what is our expertise? Today, if I am a full-time investor, perhaps I would want to cut out a middle person because I'm spending all my time and effort into the research, the planning and the investment. Then I want to maximize my returns. However, the contrast is that today, if I'm actually holding a full-time job and investing is something I know I need to do, or even purchasing insurance and planning for insurance is something I need to do, then perhaps it's worthwhile actually considering advice or recommendation from somebody who is doing it day in, day out, because they do it on a daily basis. There definitely has some, you have to give them some credit or for the experience that they have accumulated over the years to be able to give perspective on things maybe which you haven't considered, because either you are too focused on your day job or you perhaps have failed to consider because of the lack of exposure. Not to say that you can't do it on your own. So I think direct purchase insurance or self-help investments, there are many tools out there. But having said that, for insurance products itself, while you are able to get direct purchase products online, there are actually majority of products that actually require a licensed advisor to help you obtain the product. That is MAS's way, MAS being Monetary Authority of Singapore, their way of protecting consumers to ensure that a complex product like insurance is properly understood by the consumer.
I see. So it's a law lah, basically.
Governance policy by MAS.
Okay.
I'm not very sure whether you consider that a law.
Okay, okay, I mean, it's a particular legislation lah.
Yeah.
Okay. Case study A, this person has about a $2,000 a month income, say from a scholarship or whatever, etc. How would you advise $2,000 to be allocated? Say a current university student.
So for clarification, this 2,000 university student is still living with their parents.
Yes, correct.
They do not have to pay for their house.
Correct.
Okay.
Yeah.
So I would say that given not much fixed commitments in terms of housing, or I don't believe that they would have gotten a car at that stage.
No, probably not. Yeah.
Yeah. Okay. Then the 2,000 is pretty disposable in the sense where they are able to decide how they want to manage it.
Yeah.
I would just share very basic budgeting principles. Firstly, I would say there's this thing called the MAS Basic Financial Planning Guide.
Okay.
All right. So this is published online. Everybody can take it from the authorities in Singapore with regard to what is a good ratio to save. Generally, they encourage you to save about 20% of your income, invest at least 10%. Okay. So that is some guidelines.
Okay.
But one guideline that I always use very freely in the advice that I offer is from a very simple concept. So imagine this: as a 20-year-old, the world is your oyster. You are about to graduate and you are about to start work.
Yeah.
How long do you expect to be working for in the Singaporean context?
At least another 50 years.
50 years.
45 years.
40, 50 years. Okay.
Yeah.
So if we just talk about that 40 years in general, I'm just going to round it down. Some people now aspire for early retirement as well.
That's true, yeah.
Okay. Then we put that into context of our life expectancy in Singapore.
Okay.
So life expectancy in Singapore today is about 84.
Yeah.
All right. So that's another 20 years plus or so of living, but potentially not working or generating any active income.
Yeah.
So just going by a simple ratio of 40 to 60, 40 years of income need to pay for 60 years of expenses. Meaning to say, right, that I need to take care of that 20 years that I'm not drawing any income. So how do I approach this is that from the first day that I start earning my income, I should be saving about 1/3 of it. And when I say saving, is talking about putting it towards future use, whether it's to protect my future income. So that can be done through insurance, whether it's saving for future goals, because I might be buying things in future as well, or investing for my retirement or any other financial goals that I may have. So a simple way to approach it is to use about 1/3 of the income that I'm actually earning.
So youth out there, you all know lah, stop eating your fancy lunches, stop buying loot boxes on online games, and put the money into your savings.
I think one of the things that I also want to emphasize with that, right, is the 33% that we put aside, or the 1/3 that we put aside, we cannot just put and lock inside, lock and key, put in the safe, because there's one more thing that is at play, which is inflation.
Yeah.
And that's the reason why I highlighted earlier also, we put it to future use. It not only consists of pure savings in the bank, we do need to put the money to work for us also.
Yeah. Is there anything else that I have missed out today?
No, I think the main thing that we want to put across is really to not be averse to starting early.
Okay.
I think by exposing yourself, whether you commit to a decision at that point in time, being exposed to it and finding out more about it will only serve to your benefit.
Yeah.
And once you are more familiar, or you can find somebody that you trust or are comfortable with the process of actually doing a financial plan, then that's when you can really start. And the earlier you start, always the better. Well, I'm really glad that helped. Yeah. So thank you for your kind words as well.
No, you are most welcome, and I wish you all the best. I hope you continue to do well, continue to serve more people, and also please continue to like, share, and subscribe the content you find on this channel. It really will help us a lot. It will really help us grow to bring more expensive guests like Jeremy on this show because these people are all very high value. I bring them here also, I very paiseh. So please help me to grow so I can bring more of these people to give you all more value. See you.